The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to a gorgeous day down at TFNN, the headquarters for technical trading and investing. And of course, nice day down here. I think we've finally shaken the rain off. We had a little bit yesterday morning. The ducks are still out in the front yard swimming around, so I'm hoping that all that water goes down, at least in my area, fairly quickly. But the sun's out today. It couldn't be prettier and a nicer temperature and lower humidity. So feeling pretty good out here. We've finally gotten the weather that we crave 8 months out of the year, which is just about perfect. We're good till probably the end of June. Then we'll go back to it. But I don't think we're going to have quite the cold weather that we had last year. Anyway, what do we have going on in the market today? We're a little off. Everybody's a little bit worried. We had the cloture vote, and now everybody's worried about a vote that I think is a fait accompli. I don't think that there's going to be any problem with that vote going through the Senate. And the question is what happens in the House, and I think that's where the indecision in this marketplace is already. Cold in November. My engineer, Owl, thinks it gets cold in November down here. He must have lived down here a long time. I went through minus 20 for 2 weeks in Kansas City. That's cold. 40, 50 is not cold. Indiana. You should know that that's not cold then. He says he was raised in Indiana, and his mother dropped him on his head, he says. Okay. Anyway, he's shaking no, but somehow I have a feeling that he's saying yes. Anyway, we've got a little bit of it's light volume, so I'm not going to say we've got any kind of big signal out here, but we're off 8 points on the S&P cash, 2 billion shares on the consolidated New York Stock Exchange tape as we speak. And what do we got? There's a few stocks out here that are rolling kind of early. I didn't find any news on IBM. It was probably the most surprising. This is off, 3 points or so. What was it? Off $3.60, which is 1 3/4%. This thing's coming back to fill its gap. That gap happened, when was that? On the 10th. And volume's probably going to be a little less today. So this thing is bouncing around. Certainly looks like IBM could be making its ABC down to take us to 157. In fact, why don't we take a quick look at that right now? This is where Confluence really comes in. I wanted to show how we did come up to that level. I think this is one of the ones we sent out in the special report. You get right up to that level, and it's normally pretty close. This thing just went over, and I think Confluence went to 193. Of course, I'm looking at these monitors at 3 or 4 feet back, and of course, always a challenge to see what you should see if I was sitting at 18 or 24 inches from them. But always interesting. Anyway, Confluence level, I'm going to wave my mouse over it a little bit. What is that? Yeah, 192. Yeah, 193. Got to 194.89 intraday on September 18th. But when you get those very nice, crisp, clear Confluence levels, normally resistance is very close to those. $1 on a $194 stock, probably fairly good at predicting at least where that's going to come in, even if it was just a bit higher. Now, we were talking about probably trying to find where this expansion is on this, and it's, what are we going to call that, the 200? See if that, let's do that. I know it retraced a little bit more than we would like to have seen. Well, let's just go ahead and select that one as A. let's go ahead and select this one as B. And hang on a second. Okay, that's A. That's B. Okay. Now this is supposed to be C. There we go. This thing retraced a little bit more than you would like. Almost 70%, 6.9. So a little high. Normally, you don't want to be pulling shorts any more than 618. You probably would have been short at the 618 and had to stop probably somewhere, I don't know, probably 75% retracement of that move. Probably would have been a safe stop in this. But this sets up our ABC down. That takes us to 175 on IBM. And let's see. Let's go back just a little bit farther in time out here, because I think right at 175 we do have, and it's right under that gap at 180. So yeah, we'll probably get down to 176 on this on an ABC down. So it will be interesting. But this thing has been in this consolidation for a while. First time down at 181, beating against the July 12th low at 181. And you had 5.4 million shares. You came down. I've been talking about this. The volume really never came in as strong as you'd like. It bounced a little bit here. It's coming back down, and I suspect if this thing is going to break, we're going to know fairly quickly at that 181 level. So if you're watching the rest of the market and wondering how the Dow is going to work and whether it's going to hold or not, I'd be watching IBM here, because this thing has been one of the weaker tech stocks out. MSFT. Microsoft, one of the few stocks up today in the tech sector. The rumor has been pushed around that the former big honcho at Boeing, now at Ford, Malawi, is going to be the next CEO of Microsoft. Boy, I certainly don't hope so. I certainly hope not. And he may be a great bean counter and know how to get great focus. My guess is he's not much of a visionary. Car company people are mostly into counting widgets and metrics, and not so good on what you can't feel or touch or see. And there's so much in the tech world that's that. Is he very good at Ford? Yes. Would he be good at Microsoft? I think that would be a hard sell. I think that there are a bunch of people that Microsoft fired that would be much better to lead Microsoft into the next decade. And one of the ones that is a little bit up. Again, not a lot of volume today. I think this is more a little bit of market gas than anything else. I had some questions, and you can always give me a call at 877-927-6648. That's 877-927-6648. Microsoft can make cars. You don't need nothing about tech. Yeah, I know. I was going to talk about the lumber liquidators and some other stuff. But first thing, people were asking me, sending me a few messages, and I wanted to wait until we probably had a Friday like today where we could talk just a little bit more, and that is what was going on with these stocks that dip below $10 and why they have to be sold. Someone said, well, why is it in their charter? Why do they have to do that? And the answer goes back to something that I've spoke about many times, and that is called a value at risk. And if you Wikipedia it, here I'm going to bring it up so you can actually see, is a value at risk. And it is a model, and most of the people on the street and companies have adopted it. Value at risk is a way of at least some metric at finding out how leveraged you are. Now, one of the problems with stocks under $10 is they tend to move a great deal more than stocks over $10. And I've shown the charts before. When you really think about it, if a stock goes from $5 to $10, it's going to take a certain amount of shares, but X amount of dollars. Now to go from 10 to 15 bucks is again going to be a logarithmic move. It's not going to be linear. $5 to $10 basically would be double the amount of $0 to $5, and the answer is no, because every dollar you go up logarithmically moves the meter up. So 10 to 15 bucks, of course, going to be what, about 1.3? I think it's 1.3 times as much money. And what we know out here is that the more money that has to come in to move a stock or come out of a stock, the less it's going to move. What they don't want is a lot of volatility driving up the value at risk numbers of a particular fund. When those go up, the amount of money that a company can put into them has to go down. And the most important thing for the Fed and everybody on Wall Street is to keep that VIX number plugged as low as possible. That means that they can leverage themselves as large as possible. Seems a little bit nuts, but that's exactly what's going on and why they changed the $5, which had been for about 20 years a $5 requirement in a lot of these funds. The stocks had to remain over $5. Now, a lot of that had to do with most of the brokers not allowing people to short stocks below $5, and a little bit of both in there. Now, of course, almost all these funds have a $10 limit. So we're going to see a couple of companies out here today, and you're going to watch them. Once they get below the $10 range, what happens to them? First one is a JCPenney, and of course, this thing hit $10 yesterday, decent volume, but really we're going to see just all these funds puking up shares of JCPenney over the next months, however they last. Of course, they're going to be pushing out more shares of the stock, so look for a bunch of lies, and I would imagine a pack of lies from Goldman Sachs. Who's going to be underwriting this thing? And are you going to get some jumps? And yes, is there 25 or 50% short interest in this thing? Probably now. The answer is yes. So I'm not going to be shorting it. If I could sit on it for 6 months or a year, I'd probably find a level that I could live with and get short this thing. But it can take a long while for these things to go sideways. But of course, they had a second, or they're putting a secondary down. But these guys really can't shoot straight right now. On Wednesday, reporters from CNBC point blank asked them whether or not they were going to have a secondary. And then two people in the same meeting room had asked the CEO of JCPenney if they were going to have a secondary. CNBC talked to both of those people. And of course, JCPenney lied to them all. We'll be back in a minute. Give me a call, 877-927-6648.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're looking at Lumber Liquidators LL today. And why did this thing have such a big drop? Well, jackbooted thugs from the government ran in with guns, ready to kill people because they may have had some redwood. Nobody's armed. These aren't drug dealers. There's nothing else. All they had to do was go to the front counter and present their warrant. But no, they had to come in and intimidate, chase people around. This happened with Gibson guitars about 6 months ago. And this is the problem when you get a government that is not accountable to the people. There's got to be at least some level of issue out here. These people aren't killing anybody. They thought that maybe somebody had imported some wood that was protected, which, okay, that's fine. But my guess is that you're not finding a bunch of guys behind counters and stacks of flooring with AK-47s ready to take your head off. There's, like I said, there's got to be a little bit of proportion out there. How many people, how many ladies do you think in there they scared for absolutely no good purpose today? But that's part of it. You get that mindset that you belong to the government and everybody else is secondary. Easily comes. We saw that in Ruby Ridge, where it would have been a lot easier to do it another way. But the issue is not whether to do it the right way. The issue is to intimidate. And this is exactly what the EPA is doing. Some people are very worried about the new EPA director. I think this one is a good example that she's not any better than the one that they had before. And we'll worry about it. But recovering a bit out here today, but for the most part, I have an idea. This isn't going to end up being anything more than the Gibson guitar fiasco was, and that is that we found a few pieces of rosewood in your place, and so we're going to come after you for a couple $100,000. But we want it known that if you touch a piece of redwood, we're willing to put you in there next to people that have killed and maimed people. Well, anyway, I'm not a big fan of the government today. In fact, if you missed it, probably one of the best South Parks was on this week, and it talked a lot about people that just love government. And I think it is some of the best social satire, albeit poorly animated, that there is, but very good. Anyway, lumber liquidators down, huge volume out here today. A complete overreaction by the government. I don't think that any of these things falls to the level of a giant cocaine bust, but a lot of people think it does. Anyway, other things in the value at risk, I think so. Just that anything under $10 moves too much, and that means that leverage, and everybody wants to suck up that leverage because, of course, they're borrowing money at next to nothing, and they're getting 5-6% back on these stocks that are paying dividends. So used to run, no reason to hold these stocks below $10. Oh, that's what I wanted to get to. Best Buy, BBRY. This thing is, oh, I didn't spell it right. BBRY. I'm going to look at this just quickly. This thing's tucked under $10 now. They're going to have to liquidate it, and for the reasons I said before. All the lies that they've told, gone on CNBC and told, are pretty much coming out. Now we find out that the CEO is going to get about $25 million for running this company into the ground. It doesn't seem like shareholders in this can catch a break, but my guess is we're going to be out for a while. Anyway, BlackBerry, RIM, whatever you want to call it. I'm also working on a theory of just how bad stocks do after they change the name. There's a few stocks, I think, out there that actually can get to that, but I'm trying to think of stocks that change their names and actually become successful. Pretty few of them, actually. So, we'll see. Anyway, we're going to get into some more stocks. A lot of the IPOs out today. We're going to have a good time. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're out at 1690 on the S&P cash, just under 2.2 billion shares. So a light volume day on a pullback of 8 points. Been in this 1690 to 1700 trading range now for a few days, and I suspect that we're probably not going to have much until I think that there's a vote tomorrow afternoon, and then it's going to be Sunday, and they're going to go on the talk shows and throw rocks at each other, and we're probably not going to know anything more than that. Maybe we'll get some movement and someone will find out what's happening. I imagine we're going to get a 20-point move, 25-point move up in the S&P as soon as there is an agreement, and we'll probably continue to bleed a little as long as there is not an agreement on the debt ceiling and some of the other issues out here. So just wait and watch, and of course you're at the mercy of headline risks. So if you can't sit right in front of your machine, not anything bad with sitting on the sidelines. I'm looking for one more test up here at the top at 1730 to set the hook. If the volume is light, I think we're going to have a fairly decent shot at shorting the market. I just don't see any energy on the way down here, not shaking the belief of the longs to continue holding and buying on every dip. And we'll continue looking at that. Anyway, one of the stocks that I heard somebody pushing on CNBC today was, you've got to be in consumer discretionary. You've got to be in it. And one of the things is rare out here is to see breakouts on volume and then within 2 days see them closing back below the breakout level again, and then really not having any energy. The XLY is one of those ETFs, which is fairly interesting. Looking at the last high out here on August 2nd of $60.25, you had 4.1 million shares. So we go through that on the 18th. You've got almost, in fact, more than double the volume, 9.6 million shares. This thing should have had about 3 days of follow-through. You open a little higher, you close below the high the next day, and 3 days basically give it all back and start back at that resistance level. So we've got a lot, very light volume out here today, and for the most part, you can say this thing's going sideways. But it's kind of hard for me to look at charts and put them up against anything that they're saying on yeah. And TBT. Is that right? TBT. We'll take a look. Yeah. One of the things, I had a question in the den of whether we had a Gartley in the TBT, which is the ultra-short Lehman 20-year Treasury ETF. It certainly is a Gartley. I don't like Gartleys where the B to the C point actually come in and retrace 87%. I would love this thing probably to have been more into the 70% retracement of the A to or X to A point. And or actually from the A to B point is what it would be. This one, when they come back almost all the way up to the top, your risk reward just doesn't work as well as when they're in probably somewhere around the 65% range. So I would have loved to see this thing probably get up to about the $80 range instead of the almost $82 range it hit, and start its C to D leg out here. So is it one? Yes. Do the risk rewards really look great? Man, not all that exciting. But maybe you can use it for a bigger move. One of the things I dislike about this also is that the energy up from the X to A leg is about the same from the C to D leg down. So I'm not really catching a lot of overwhelming bias one way or the other. A lot of stocks out there that are giving real good, clean indications, either very heavy down on the C to D legs or on the very weak up on the B to C legs. I mean, just not getting a lot of energy one way or the other. They're kind of averaging out. And again, right now I suspect that we are in a trading range, and that's why I'm sitting on the sidelines right now in all cash. I'm waiting for the bounce that we get probably after any settlement, political settlement on the debt. And at that point, I think we're going to get up there and everybody's going to go, well, what's next? And it's either going to be up probably 300 points on the S&P or down 300 points. And I just don't see any energy to the upside, so I'm waiting at this moment to go short. But if I got any kind of energy coming in here, I suspect that I could be also, if we break the top with some kind of volume and energy, I could be persuaded to think that maybe that's it. The downside to going long here is that most of the surveys for retail investors show that they are ready to get back in the market or just have. Almost always a good indication of at least a short-term, if not medium-term, high on the markets. Let's see. You can give me a call at 877-927-6648. That's 877-927-6648. I wanted to get into one of these other ones here if I can find it. There we go. I wanted to go through these stocks today. We had a whole host of them out, and of course, one of the ones we got a couple of them moving fairly strongly. OPHT is a brand new one. It's OPO. I can't even pronounce it. Opheo Tech Corporation, OPHT, and it is a new biopharmaceutical IPO. They're up almost 11% right now, 31.25, up about $3. Other ones on my list that are very interesting. Ring came out, I think, today, and it's pretty flat. RING. It is kind of like a voice over IP new stock. Probably the one that was most interesting to me was this VMEM. It's a memory company. And the strange thing is, this thing is not doing well when we're finding stocks like MU that this can't stop. In fact, we hit a 2 and I think half-year high in memory prices this morning for memory prices exchange in Taiwan. And, of course, not a lot of volume in this thing going into the weekend. We're probably getting to some point where these memory companies are going to crash because there's nothing to solve a high price like a high price. Everybody and their dogs want to get into memory at these prices. Micron Technology up almost, what was a $5 stock not too long ago, almost up at 18. This thing may even go a little bit farther, but real memory shortage at the moment, and Micron Technology making the most of it. But my guess is that that shortage will not last forever. PINC. Trying to see what else out here. Oh, FMI. What is this? This is another one not doing too well. Foundation Medicine, another IPO at today down yeah. Oh, now out a couple of days now, off a $1.53, and some of these IPOs, a couple of them didn't make it, which is probably more thing than anything that I'm interested in. It Fate and TGen didn't make it out, and it'll be interesting to see whether they are able to get back into these and kick them back out. But most of these were smaller. There were a handful of big ones. That they could get this one out and it failed is very interesting to me in VMEM. And we'll be looking at some of these IPOs over the weekend to see what was out there. Anyway, we're going to go to David, my namesake in Denver. How you doing?
Very well. How about you?
Fantastic.
That's what I'd like to hear. Quick question for you on AXDX. I'm wondering if you could give me your synopsis of how you look at this stock, which is a technology diagnostic company stock.
The problem I have with it, and I brought it up several times, I think even this week, just a very light volume.
Okay.
And that would be the biggest problem. I've done my own studies. I've done studies and read studies that a lot of institutions, especially colleges, have done, and the predictability of a stock with low volume is extremely low. And that's the only thing I can say about it. It's something that's trading 53,000 shares today. It's just not something I can ever trade in. It's feast or famine. Either this thing's going to go to $20, and then as soon as you go to sell it, it's worth $4. You know, that's the problem. You get 1,000 shares of it, maybe you can get a couple bucks out of it, but the predictability is just very, very poor on these, and that's what I dislike. And two, are you in this right now?
Yes.
What level are you in?
Oh, about $8, $7, $8.
Okay. Where were you planning on selling it?
Well, I'm very familiar with the company, and I guess I would call it a long-term hold because they don't have any revenue, and but expect to have a product out, not for another year and a half. And so I like a lot of the fundamentals very much, and I guess But
they don't make any money. So what fundamentals? You're just talking about the technology that they have.
Exactly. Yeah,
okay. Accelerate Diagnostic engages in the research and development and commercialization of proprietary surface chemistry formulation and quantitative bioanalytical analytical measurement instruments. Companies developing a BAC cell system, a rapid diagnostic platform for diagnostic of life-threatening bacterial infections. Huh. So this company's going to go back and diagnose what, like that flesh-eating bacteria kind of thing?
No, it basically does what is currently done with a Petri dish in 48 hours, except they can basically identify the bugs and also measure kill rates.
Okay, and was this like a chip, or how are they doing it?
No, it's kind of, I'm not sure that I have the technical knowledge to describe it to you, but it's basically they take a sample and then can count the bugs and identify the quantity and type, and then they can run susceptibility testing on it.
Yeah, there's a lot of people in these fields that are doing this all on a chip, and of course, like you said, it just you don't have to send it off to the diagnostic factory. It just gives you the results that you would get if you did send it out. Those are the kind of companies I kind of like. I'd like to probably dig around a little bit further. I mean, the chart action's good in this thing. Nothing wrong with it. Do you know why they got the sign of strength yesterday?
No, absolutely not at all. I mean, the main thing they had the strength a year and a half ago with kind of new management and new capital, which is predominantly management-based capital, which is good. So that's where I think a lot of the enthusiasms come from generally. But I guess my question is whether, on these kinds of stocks, whether it's this one or any kind like it, would be, is there any reliability of, for example, retracements and things like that?
In my experience, and I've done actual testing on it, it is very tough to get them to act like stocks that trade over 300,000 shares a day.
Okay, so you really ought to, if I just to ask you a follow-up or to take an inference from that, so what you're really saying is, I think, is don't trade it like, to see your normal retracements and these kinds of things, or you could be left in the dark. You really just ought to hold a fundamental position with an objective and then, have potentially a very high risk because of the low volume.
Right. I mean, this thing's going to be up one day $4, and it may be down that same $4, and you may have a loser tomorrow. And that's
right.
That is the with the entrance and exits so very close. Either people are telling you get a new car and everybody's running into the theater, or everybody's yelling fire and everybody's trying to get out of the theater. Those entrances and exits are always fairly narrow, right, and not clearly marked. Like exit, right?
Yeah. Mm-hmm.
So that's the problem. And there have been a lot of studies. I did my own following and using my own data that I found, and I've done it a few years ago. I may run it again to see if it's changed at all. But almost all of them, if you're going to have a big surprise, the chances of seeing someone else get out way before that are a lot better than these. On these, if someone starts selling heavy, the stock's already dropped $4. Mm-hmm. And so to get out, right? That's the problem. Unfortunately, if it's an insider, they can't sell. Then one day the news just comes out and they get smacked. And there's no real, on bigger companies, someone always knows. So there's a hedge fund selling or something like that. On these small cap stocks, it's very hard. Thanks for the call, David.
Thank you very much. Bye-bye.
Bye.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Boards. What's the only thing that really solid stress? Yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weak. I'll teach you how.
Segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
They're calling it the. What can you say out here? If you could come back into that $69 level, it would be very interesting. We talked about Microsoft and Micron both up high. Question is whether or not the prices are going to break on memory time soon on the system. But it's not a rousing endorsement of these things. This one's down a little bit more volume. And again, a lot of these stocks look like they're nothing more than in a large trading range out here. Let's see what else we have out here. THO came out with earnings last night. Thor Industries. If I can type THO. I always come in here on Fridays, and of course, I forget that I've got the El Cheapo Del key. Always had a problem typing on it. I've had a Microsoft Natural keyboard for so long, I really can't do anything else. A good example of very tight confluence ranges out here. If this thing does pull back, you've actually got 2 very nice ones. And decent volume up here. You needed about 80,000 shares, 800,000 shares. You're certainly going to get that today, so we've got a valid breakout on Thor Industries. JCPenney's. Let's see if there's anything else out here that's exciting. You know, we didn't have a whole lot of movement. A little bit down. Maybe we're feeling a little bit of that from Europe. The FTSE was down 0.8. Germany wasn't open, I don't think, and France both closed. Spain's IDEX was down 0.5%. Portugal down 6%. Italy's off 1.3%, 0.5% on the Irish. And a little interesting. I think we have a Monday holiday in the Chinese market too. I should have checked that. I will check it before the end of the day. But I think we've got one. It may be starting today and ending on Monday. Maybe someone in the den can tell me quickly out here. Let me move some stuff around. Maybe someone knows out there. Make sure and check on that, because I think we're going to have probably a slow day on Monday. If I remember looking at the calendar earlier this week and seeing that China had a chance of being closed on Monday. but I think it does. Anyway, we will see you in the 4 o'clock hour with Tom O'Brien tonight, doing our Tech Insider thing. So we'll see you then.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position, subscribers sold recently for plus 42% on parts and plus 64% on rest. And Hertz Global has a core position for 6 months. A current position, entered as a turnaround company, is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to the Opening Call see the Chapman Wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com.